Thank you. Good morning. So we will officially start the session. Last week. Okay, thank you. Okay. Okay, so last week we ended up here. We talked about credit evaluation. Credit evaluation is equally important for banks as well as for non-banking financial intermediaries. So if I just talk about what we said last week, we talked about shadow banking. Shadow banks are also known as NBFI, non-banking financial intermediaries. What we do is, with a bank or NBFI, what we do is we collect money from others and hand over that to those who want to use it. And that is our middleman job. For that, we charge an interest. But before lending, we have to be very careful on recovery. We can give away money to anyone, but the importance is giving it to the people who can pay back. In order to identify that, or what we call is credit evaluation, we are looking into these factors. That's what we discussed at the end last week. Today we start a new session, insurance. Okay. Now, how many of you have life insurance policies? Say yes if you have life insurance. So I see a sample about 40. Okay, right. So I see 2 out of 40. We normally say insurance penetration rate is very low in Sri Lanka. Now, in other words, if I ask, why don't you obtain a life insurance policy? Now that is valid for 38, almost like 38 members of this sample. For certain reasons in Sri Lanka, people are not interested in insurance, life insurance. In this backdrop, we will look at what insurance is. Okay. So in insurance, there is a large number of homogeneous units. That means there is a large number of equal members who want to get insured, but the loss is accidental. It's not a definite loss, but there is a chance, a random chance, a very less chance. Large loss, small losses not claimed. Affordable premiums, limited risk of catastrophically large losses. So these are some of the characteristics of insurance field what we see. If you see catastrophically large losses like tsunami hit Sri Lanka, that was when tsunami hit Sri Lanka, that was a large catastrophical disaster. But such are very less. Opportunities of having such incidents is very less. Affordable premiums, for every individual, he can pay a small amount of premium. And Small losses are not claimed. You may go for the fire insurance or vehicle insurance, but small losses you are not going to claim, and because you are worried about no claim bonus, then no one is willingly damage his own property or his life. That is our understanding. So the losses are accidental. Right. Now what is insurance? Insurance operation is to collect more premium and invest income than payouts in losses and underwriting expenses. Okay. Now, when we talk about investing, Warren Buffett is known as one of the biggest investors. Warren Buffett prefers insurance companies mainly for this reason. Collect premiums and invest, where payout in losses and underwriting is less. You collect more premium than what you pay out. That is insurance business. So it should be often profitable. Insurance income is made up of two components. One is the premium collected through underwriting. Okay. So the other is investing. Now we said in BFI sector, we are not printing money. What we do is we collect money from others. So insurance is the first product that we are looking at. The insurer will collect money from general public and pay back when there is a claim. But the claims are less. If so, they always collect more than what they pay out. That more, that excess money, they invest. If you are a careful investor, you will earn more than the average market interest rate. Therefore, you can run a very profitable business. Now, last week, we talked about some examples in CSE, Colombo Stock Exchange, and I showed you how profitable investing can be. So stocks is only one mode of investing. Later on, we may look at portfolio of investments. So the insurance company will collect from customer base and invest. But the insurance operation is to collect more premium and invest income than payouts. Insurer's income is made up of two components. One is the premium collected through underwriting, where insurers select risks to insure and decide how much in premiums to be charged for accepting risks. The other income is investing this excess money. So with that, he can make his business a profitable one. Now, this is a very popular question in past papers. What are the two types of insurance? So your answer is very simple: life, general. Life insurance, you can call it non-life, or number two, general insurance. So there are two types of insurance policies. When I asked about the insurance policies, life insurance policies, whether you have a life insurance policy, means we are talking about individual human beings' life. Is it insured? The other is what is not falling into the category of life. And there are a lot of products, we bracket them all and say general insurance. So you have life and general insurance policies. There was a time where the same insurance company can run in general insurance as well as life insurance as different departments. But the regulator of insurance, that's IBSL, Insurance Board of Sri Lanka, they are proposed to segregate life and general. Therefore, now an insurance company can only handle either life or general. Right. Now, what are the factors affecting to life insurance? We first discuss. Okay, what are the factors affecting to life insurance policy? Suppose you want to obtain an insurance policy, a life insurance policy. A representative of an insurance company will meet you, and in the application there will be a lot of questions covering different areas. So these are the areas that should be understood in order to evaluate the risk of your life. Okay. So what are the factors that will affect to the life insurance policy? So in the chat box you can send me some answers. What are the factors that will affect to the life insurance policy? When you appear insurance agent and when you want to say I want to have a life insurance policy, he may give you application. In this application he may collect a lot of information in order to evaluate the premium of the risks he's undertaking. What are the factors that should be understood by the insurer before insuring your life? Okay, right. What else? Health, hobbies, occupation, age. What else? Age, okay. Gender, okay. Right. Now, who will live longer, male or female? Yeah. Who will live longer in general? Female. Yeah. Statistically, that's the number. Females live longer than male. So that's a factor that should be considered. Correct. Then your family history, medical history of your family. Yeah. Is your, yeah. So whether your parents are living, whether your parents are suffering from certain uh, symptoms, certain illnesses, the medical history, your and your family history. Then your habits. What are your habits? Okay, smoking. Smoking, will it make your life more healthier or more riskier? Smoking. Yeah, it won't make your life healthy. It will make your life more riskier. So the insurer will charge you more when you say I'm a smoker. Alcohol the same. Then there are some dangerous sports or hobbies like martial arts, racing cars. Yeah, there are certain hobbies. Then there are certain occupations which will put your life in danger. Therefore, the insurer will evaluate your life, and based on that, he will charge you a premium. Age, health condition, health history, weight, occupation, gender. Yes. So you have not told me the fact. Weight. Why weight is important? Tell me a reason why weight is important. Other factors you have said. Yes. Age, gender, family history, health, weight. That's an important factor when you are evaluating life. Right? Overweight means obesity, and that will lead to many situations that will shorten your life. Okay, so these are the factors that will be considered when evaluating your life. Now we are looking at general insurance products. Under general insurance, you have first thing, motor insurance. That is very popular. Why motor insurance is very popular than life? Any reason? Why do people obtain motor insurance, vehicle insurance, than life insurance? Why? Why vehicle insurance Yeah, it's a rule, it's a regulatory requirement. Yeah, you cannot take your vehicle to the road without having a insurance cover. Therefore, vehicle insurance has become very popular than life. There is no regulatory requirement you to have a life in order to live, life insurance policy in order to live. But you must have a vehicle insurance in order to take the vehicle to the road. Motor insurance is an insurance policy that covers the policyholder in case of financial losses resulting from an accident or other damages sustained by the insured vehicle. A comprehensive motor insurance policy covers damages to third party and third party property along with compensating for own losses as well. So that is motor insurance. Fire. Fire insurance is property insurance that covers damage and losses caused by fire. The purchase of fire insurance, in addition to homeowners or property insurance, helps to cover the cost of replacement, repair, or reconstruction of property above the limit set by the property insurance policy. Okay. So fire insurance covers the property, the assets that need to be replaced, repaired, or reconstruct. If it's a property, maybe you have to reconstruct. That amount is covered by fire. Okay. Now, I'll tell you one example why these insurance companies are very careful when they face a claim. There was an envelope manufacturer. Okay. So their main business was printing and distributing envelopes. For a long period, people used more and more envelopes. So this company grew faster, and later on, people started not to send letters, but still the banks and insurance companies, as well as mobile phone service providers, continued sending letters to the customers. So this company concentrated on corporate envelopes, and they had a very good business. But very soon, they also found corporate sector is slowly giving up envelopes, right? Why? Tell me a practical reason. There is an envelope manufacturer. They initially targeted general public, then they targeted corporate sector. But very soon they found even corporate sector is slowly reducing the number of envelopes demanded, ordered. Why?
Because of emails?
Not of the cost. Cost can be compared. Cost is always compared with alternative. Okay. Yeah, electronic mails, emails. That's it. In addition to that, SMS alerts. Right? Because of these things, now envelopes are not much demanded even by mobile phone service providers or banks or insurance companies. The moment you pay a premium, or when you want to remind to pay a premium, even the insurance company send you SMS, a text. With that, envelope manufacturer found the market is, the sales is dropping, market is reducing. But he has been the market leader, and he has been printing unnecessary quantity. So he can always quote lesser than other suppliers. For an example, there is, let's say, ABC phone service provider. They only need 5,000 envelopes per month. So other manufacturers, they only look at 5,000 quantity and print 5,000 envelope and give the cost for printing exactly 5,000. But this particular company, they want to capture the market. They print. They are ready to print about 200, 300,000 envelopes for ABC mobile phone service provider. So when they caught for 5,000 a very low amount, targeting to print 300,000 envelopes and store it. So their cost is always low, and that was their winning strategy. All of a sudden, they found their stores are filled with undemanded envelopes. Okay. So at one point, all of a sudden, the stores was damaged by fire. Now they go to the insurance company to claim fire insurance. The insurance company visited the place, look at the amount they say that was the damaged cost of envelopes. Then they went to, okay, to whom you are printing these envelopes? Okay, I'm printing these envelopes for ABC phone service provider. How much quantity was there? 300,000 envelopes. But they approached ABC and asked how many envelopes you require for the month. 5,000. And even if you keep for 1 year, you must have only 60,000 envelopes. So the insurance company is not ready to get into this trap. Okay, so this is the problem of insuring. The insurer have to be very careful when evaluating claims. Many people wanted to play fool with insurance companies and recover all their losses, the normal business operation losses, through insurance policies. So some try to play out and soon find they can't play out with the insurance claims. Then what they do, they say, okay, it's very difficult to get an insurance claim. Right? So if you are really honest businessman, you know the risk you are undertaking. If so, insurance will be very helpful. But we have seen many attempt to make bogus claims and say, and they all damage and fire, put fire in place and damage their own properties in order to claim a massive fire insurance policy, massive fire insurance claim. Right. Next, homeowners. Home insurance, also commonly called homeowners insurance, often abbreviated HOI, is a type of property insurance that covers a private residence. It is an insurance policy that combines various personal insurance protections, which can include losses occurring to one's home, its contents, loss of use, or loss of other personal possessions of the homeowner, as well as liability insurance for accidents that may happen at the home or at the hands of the homeowner within the policy territory. So homeowners insurance is another insurance policy. Now remember, for exam purpose, you can be asked what are the two types of insurance policies. You have ready-made answer, life, general. Now, then you can be asked what are the general insurance products. Now we talked about motor vehicle, fire, now homeowners insurance policy. Let's say homeowners insurance policy cover the property plus the content within it. Okay. For an example, a home, a house valued about 20 million plus furniture about 2 million plus wall around the house, say another 2 million. Finally, let's say the total amount is about 27 million. And the insurance value will be, the premium, annual premium will be about 12,000. Means what? It's really worth for the homeowner to go for the home insurance policy. Right? You pay only 12,000. And even if a plane come and crash on your house, right? Suppose you are lucky enough to live, you can get the claim to reconstruct the house. But most of the time, things in between, let's say glass walls, glass windows, that can be damaged. So you can go for the claim. Then maybe furniture. So these things can be damaged. So you can go for the claim. At the same time, remember, insurance companies are also aware people don't claim unnecessarily. Okay, they will avoid bogus claims. And we have seen a lot of natural perils taking place. Cyclone Burabi. We never expected that in Sri Lanka. Right? There may be damages on houses and properties. So that can be covered by these homeowners insurance policies. From one side, people are not aware of these insurance policies. So therefore, they do not go for insurance. Traditionally, I have seen some advertisements on life plus few general insurance like vehicle. But these insurance policies, very few people go and obtain other than those who construct on loans. But after that, they are not worried about home insurance. At the same time, insurance companies are very careful on bogus claims. Travel. A typical travel insurance policy will have coverage for a traveler's main concerns, including trip cancellation, medical emergencies, travel delays, and lost luggage. Most policies are built to be comprehensive to protect travelers from a variety of events that may cause a financial loss before or during their trip. Now, homeowners insurance, you can understand the type of risks they are undertaking. Travelers, when you travel to unknown country, you undertake a very high risk. Trip cancellations. Sometimes airports may be closed down due to various reasons. In Europe, a fog, a smoke, closed down airports. Then all of a sudden, these kind of diseases like COVID may lock down. On such, you will be locked in a country, unknown destination for a longer period. Whenever you travel, you are undertaking a lot of risks. So you can transfer your risks to an insurance company. So travelers, tourists prefer travel insurance. Loss of luggage, they can go for claims. Medical requirement during this tour, you can call for that. So travel insurance is another general insurance policy. So you should be able to name and describe general insurance policies. Marine. Marine insurance covers the loss or damage of ships, cargo, terminals, and any transport by which the property is transferred, acquired or held between the points of origin and final destination. Okay, so ship voyages. That's another risky business. There was a person by the name of Detroit, and he was 70 years old. When he got into the ship, the captain said, you have to pay double the fee. He asked why. Then the captain said, the chances of you dying in this voyage is higher than an average person. Detroit argued, no, it is not. I'm definitely be able to stay the entire voyage. And he did. And he started an insurance company known as Better Life those days. Okay, so ship voyages, ships themselves, cargo, the properties, they all undertake a very high risk. Ships can be capsized. Based on that, we require a marine insurance. Health and surgical. Okay. Now, last week I asked you a question, very simple one. Can a specialized leasing company accept deposits? And the answer was no. Then I said, the best thing is look at the fishbone chart which I gave you. So specialized leasing companies fall into the category regulated by central bank but cannot accept deposits. Right? In the same manner, now I'm asking a question. Health insurance policies, is it life or general? Is it life or general? Health insurance policies. Yeah. Health insurance is a general insurance policy. Okay. For an example, People's Insurance PLC, that's a listed company. They don't have anything to do with life insurance. They only do general insurance, right? So that's a subsidiary of People's Leasing. Naturally, they initially targeted general insurance coming out of vehicle insurance that was leased by People's Leasing. Okay. People's Insurance offers health insurance. Why? Health insurance is a general insurance product. So they can do health insurance. Right. So what comes under health and surgical? Medical insurance will provide you coverage only for hospitalization, pre-specified ailments and accidents, that too for a pre-specified amount, while health insurance will provide you with comprehensive coverage against hospitalization expenses. Okay, right. So health insurance, health and surgical insurance will cover your hospitalization plus the medical claims. Next is title insurance. Title insurance is a form of indemnity insurance that protects lenders and home buyers from financial loss sustained from defects in a title to a property. The most common type of title insurance is lender's title insurance, which the borrower purchased to protect the lender. Okay. Title is something to do with home ownership, property ownership. Like for an example, there are deeds that has been very complete for 10 years, for 20 years. But beyond that, the title is not clear. Okay. So in the deeds, most of the time, they go back to the Dutch or Portuguese era, and the tombour or the pedigree shows how this land is divided throughout many generations. So you have very long history for properties in Sri Lanka. Okay. So most of them were developed especially during Dutch era. But in certain places we find the initial, the source cannot be traced more than 10 or 20 years. On such, there is unclear period. After 10 years, it's very clear. After 20 years, it's very clear. But beyond that, it's difficult to trace. On such, you have to go for the title insurance, especially when you go for the home loan, housing loan. They ask you to get a title insurance. Okay, so I'll read it again. Title insurance is a form of indemnity insurance that protect lenders and home buyers from financial loss sustained from defects in a title to a property. Right. So title insurance will protect you from such claims. Personal accident. Personal accident insurance is an agreement between the insurance company and the person insured, where the former will provide financial compensation to the latter or his or family in case of permanent disability, death caused directly and only due to an accident. So there is personal accident. Personal accident also falls into general. Professional indemnity. When you are a professional person, you have to give professional advice which will later be challenged. If you are a doctor, your prescriptions. If you are an engineer, your recommendations on construction of a building. So all these things are professional advices. But there is a risk. Professional liability insurance, also called professional indemnity insurance. is also known as error and omission. It's a form of liability insurance which helps protect professional advice and service providing individuals and companies from bearing the full cost of defending against a negligence claim made by a client and damages awarded in such a civil lawsuit. Okay, a professional person can be challenged of negligence because of your advice. I did this and now I'm in a bad situation. You must pay me. So the professional people have to protect themselves from error and omission claims. For that, they go for insurance companies and obtain professional indemnity insurance policy. Fidelity. A fidelity insurance policy covers losses sustained by the employer as a result of an act of forgery, fraud, or dishonesty from an employee. The loss can be of money or goods for the duration of the policy. The cover may be required in respect of a single employee or a group of employees. If you are a business owner, you have to protect your business from outsiders as well as from insiders. Your own employees can damage. If so, you have to protect your business from these claims. Burglary. Burglary insurance is a type of insurance policy that recompenses for loss or damage caused to insured property and valuable items such as jewelry, cash, stock, goods, furniture. A forceful entry by an intruder into the insured premises. Okay, read it very carefully. After that, I'll ask you a question. Okay. Now, if an employee working in a house rob items and open the door and get out of the house at night, is it covered under burglary? No. Why? Why?
Because it's a robbery.
Okay. It's a robbery, but it's a robbery, yes, but a forceful entry by an intruder, an outside party, a forceful entry, right? So what I referred is a peaceful exit by insider. That's not covered by a burglar. Okay, so you have to know these definitions very clearly. A forceful entry by an intruder, not a peaceful exit by a insider. Okay, cash in transit, cash in safe. There are a lot of movies that talk about bank robberies. Okay. Cash in hand and cash in safe. Cash in transit is specifically designed to protect the insured from loss of money arising out of any cause, loss or damage to safe, strong room. Any case, loss of damage to safe or a strong room that where the money is kept. Any case in which money is being carried, the goods or property of the insured for which the insured is legally responsible caused by theft or attempted theft. Okay. So cash in transit and cash in safe. So these are the very popular thefts done by organized criminals. And there are a lot of movies on bank robberies. Therefore, we have to protect the safe. And therefore, we go for insurance policies. Okay. So those who have read national newspapers after the death of a criminal, someone who was killed recently at Maligavat, okay, underworld person, After his death, there were articles about him, and many talked about his first robbery, that was a cashier point in a finance company at Nigambu. That was the first robbery of him. Okay? And after that, the same criminal gang robbed few other finance companies in Gaul as well as this Nigambu line. The same gang. Anyway, with considering the situation, this particular finance company asked their security guards to arm with firearms, and that could easily protect the premises and the cash in safe. But all of a sudden, one of the security guards has accidentally fired, a misfire took place. No one got damaged, but only a wall. By that time, this particular gang was captured by the police. And this insurance company asked the security guards to disarm their guards. Okay. So the insurance company called the finance company, asked, have you removed firearms from the security guards? Yes. Why? Because the criminals who have robbed our cashier points have been captured by the police. The insurance agent smiled and said, okay, fine. If you believe that is the only gang that can rob, your decision is perfectly correct. Okay. So in insurance, even though you are covered by a policy, still you have to protect as if it's not covered by insurance. You have to take all the measurements to protect your property. Goods in transit. We talked about cash in transit in the same manner, goods in transit. So we have seen cigarettes. Those days, cigarette vans were robbed. Goods in transit insurance covers items from theft, loss or damage while they are being transferred by vehicle from one place to another. In the course of business, some van or courier insurance policies do include elements of goods in transit, but only up to a certain value. Product liability. Product liability insurance is designed to indemnify the manufacturer or supplier of the defective product against losses resulting in bodily injury or property damage arising from the use of defective product. Okay. The manufacturers have to look after that customers get the right product. But there can be chances of defective products, especially in pharmaceuticals as well as in many other, let's say, things which we eat, beverages. Certain defects may cause damages that cannot be easily measured. So you have to protect your product. So the product liability insurance covers defective product against losses, especially bodily injury or property damage. Public liability. Once again, I'll give you some examples from banks. There is a bank which has about 14-story building, a 14-story building. On the top of this building, a name board was fixed, and due to salt breeze that was near the sea, the nails slowly got corroded over time, and this heavy board fell on a passenger who was walking by, and it killed the passenger. Okay. Now, general public who comes to your premises or to the vicinity of your premises should be protected. Okay. So he need not to be a customer of yours. General public should be protected within your building's area. So you have to, from one side, you must keep your items very in a very good manner that will not damage human life. but there can be such instances. Public liability insurance is insurance that covers the cost of claims made by members of the public. So they need not to be your customers, anyone from the general public. That happens in connection with your business activities. It covers cost for personal injuries, loss of damage to properties, and death. Yes, even death. So the extreme case which I showed you, a name board, a business activity of yours, happened within your premises, and the damaged person was not a customer, but a member of the general public who was just walking by. Okay, so this business coverage is for incidents on your business property and that events or activities your company organizes. Public liability. Suppose a branch of a tree that was grown in your premises, in your building premises, fell upon a vehicle passing by on the main road. That is covered by public liability. Okay? So public liability covers a lot of unseen events. There can be a lot of unseen accidents. No one believed, but all of a sudden something happened, and you are responsible. On such, public liability insurance will cover that claim made by not a customer, but any member of the general public. Bankers' indemnity. This insurance provides comprehensive insurance coverage from one single insurance policy to the institutions which have heavy financial transactions like bank. The risks covered under this insurance are cash, valuables in the premises, cash valuables in transit, forgery, alteration, infidel activities of staff, etc. So everything is covered by one blanket, bankers' indemnity. Bankers are engaged in such a risky business, therefore, a lot of activities are covered by one single policy, bankers' indemnity. Okay, so these are the general insurance products. You just heard names of different general insurance products. Later on, you have all these slides and you can read them, take note of them, and prepare for the exam. But for the time being, since you just heard some, type me general insurance products. Just name general insurance products. You must be able to name at least 5 general insurance products now. So quickly send me some answers. What are the general insurance products? Name at least 5 general insurance products. Good. Good. So for the exam purpose, you must be able to describe at least 5 with examples, 5 with a description. Name and describe 5. Okay, good. So you must be able to do that at the exam as well.
Excuse me, sir.
Yeah.
Can you just go over public liability once again?
Okay. Public liability insurance is the insurance that covers the cost of claims made by members of the public. That happens in connection with your business activities. It covers costs for personal injuries, loss or damage to the property, and death. Okay. Now, when you are constructing a high-rising building for your bank's head office, something falls down to the main road nearby. A damage caused by an activity of your premises to a member of general public. Member of general public. Okay. Someone comes to park his vehicle in your property, and a branch of a tree falls on that vehicle. Okay. Something falls from 14th floor, 15th floor on a vehicle. Maybe just an A4 pack falls down, or someone slips because maybe a cleaning service lady has carelessly washed the floor, mopped the floor without putting any notice. Any of these will create a liability. So the company is protected by public liability. Clear?
Yeah, thank you, sir.
Okay. Right. Now we are moving to another area, reinsurance. Reinsurance is the practice whereby insurers transfer portion of their risk portfolios to other parties by some form of agreement to reduce the likelihood of paying a large obligation resulting from an insurance claim. Okay. So we said insurance is very profitable as long as you don't see large claims. Now in Sri Lanka, we have seen certain incidents that have triggered large claims. One is 1983 ethnic riots. Lot of business premises and individual houses were burnt down unexpectedly. Then we have seen in 2004 tsunami. Right? These two were large catastrophic damages to Sri Lanka. In the world, Katrina cyclone. And you can see there were a lot of such catastrophic damages taking place. If one insurance company have to meet all the claims at once, definitely that insurance company will bankrupt. And when they fail to pay back, the general public or the insurees will lose faith in insurance companies. The moment you need, the company closed down. The moment you need them, the company closed down. That cannot happen. If so, the best thing is reinsuring. So insurer getting insured is known as reinsurance. Okay. So it's the party that diversifies its insurance portfolio is known as ceding party. Okay. So why do we take insurance? Because we want to mitigate the risk. Why do I want to take an insurance policy? Because I want to mitigate the risk. And I want to transfer that risk to a company known as insurance company. Now, that insurance company also undertake a risk which they want to mitigate. For that purpose, they get reinsurance. Okay. In simple terms, reinsurance is insurance for insurance companies. For your exam purpose, you can easily say the insurance for insurance companies are known as reinsurance. The insurer getting insured is reinsurance. It is a means by which an insurance company can be protected itself from risks. Yes, as I said, we want to mitigate the risk, we transfer that into an insurance company. Now what happened? That insurance company is undertaking the risk. They must also protect themselves. So what they do? They get insurance from another. The company who requests for the cover is called the cedent, and the insurer of that risk is called ceded. So these are terms that you have to easily remember. Cedent is the insurance company that is requesting to be covered. And the reinsurer is known as ceded, cedent and ceded. Okay, look at this. The umbrella is protecting the use of it. That umbrella is protected by another umbrella. That is protected by another umbrella. That is protected. Okay, so that is what reinsurance. Umbrella is covered by another umbrella. Insurance company is insured. The insurance company is insured in order to mitigate the risk from another insurer, that is reinsurance. Okay. Then bank assurance. Most of the insurance products happen to deal with banks. Okay. Leasing company will be an ideal place to obtain vehicle insurance. The moment someone obtain a leasing facility, he want to insure the vehicle, right? So if you can do it jointly, fantastic. The moment you want to obtain a housing loan, you want to insure that. You want to insure, okay. The moment you obtain a credit card loan, a credit card facility, you may prefer to get insured that. So if you die, the insurance company will meet the obligations and that will not be a burden to your family members. So wherever bank offers a product, there is an intersect with insurance. Therefore, bank assurance is okay. Can you hear me now?
Yes, can hear, sir.
Okay, right. Thanks. Right. We talked about this one, bank assurance. Now we are moving for another known as moral hazard. Okay. Okay. Moral hazard means we do something with the expectation of a particular result, but sometimes, okay, yeah, please excuse, I'll arrange this slideshow again. How the slideshow pane? Okay, so until this slide matter is fixed, let me tell you a story to describe this moral hazard. There is something known as Cobra effect. Okay. Now, Cobra effect is a story where a British provincial ruler happened to stay in control of an Indian village. He is very much afraid of cobras. So what he wanted is to see the extinct of this snake. So he said, anyone who brings me a cobra, dead or alive, I'll pay him 1,000 rupees. On the very first day, he got 20 dead cobras and he paid each 1,000. And very slowly he found the number is going down. He was very happy. Okay. So what is his expectation? Thanks. Okay, right. So Cobra effect. Now there was a provincial ruler, a British guy who came to a village of India, and he wanted to get rid of cobras. He's so much afraid of snakes. So he said, I'll give 1,000 rupees per each cobra. Bring me dead or alive, I'll pay you 1,000. And his intention is to see all the reptiles getting killed. It worked. Initially, let's say on the very first day, you get 20 dead snakes, and he slowly found the number is going down, like our COVID cases initially. And he's very happy. And they are reported no cobra captured continuously for 3 months. He's very happy. His belief is, my intention was to get rid of these snakes, and by now all the snakes of the village have gone. And all of a sudden, he found on a particular day 100 cobras live taken to him. So he has to pay 100 into 1,000. And it continued. What has happened? The villagers soon found it's a lucrative business. They started to rear them in boxes, and when the eggs come out, that's a superb earning mechanism. They even gave up farming and started to farm cobras. Okay, moral hazard. We expect something unexpected taking place. Okay, right. Insurance can be a moral hazard. We'll look at. Now, if a bank collapses, the government will bail out. Means what? That encourage banks to undertake very high risky businesses, because even if you collapse bank, government will come and bail out. Moral hazard. You expect to protect the financial system stability, but what happens is your own intervention will create more damages. Moral hazard examples. If you insure your car against a theft, there is no reason to lock the car. Got it? Okay. Now, why do you want to have insurance policy? The simple answer is to mitigate the risk. Right? But what is happening? The moment you know that even the worst thing comes to you, nothing matters. There is something called insurance company to look after. And why should I look after my property? It's easy to make a claim. If so, you are creating a moral hazard. If you are paid a fixed wage and there is no risk of being laid off, there is no reason to work hard. Okay. Lot of government employees even now say, why can't this government lock down the entire country? And the COVID will be easily taken out. Yes. Government employees can easily say that. I think yesterday in a newspaper I saw a nice article. Government employees have taken home 87% of the tax revenue. Okay. Work home, 87% of the tax revenue. Okay. For the government employee, they prefer lockdowns. It's very simple. If you are paid whether worked or not, you are very happy not to work. If you get sufficient high unemployment compensation for the indefinite future, there is no reason to look for the job. Now, some who are living in Australia, they say, okay, when during a lockdown, you are paid even more than you are paid when you are really working. So why can't you do that in Sri Lanka? Okay. So these are nice arguments from moral hazards. Okay. What is happening? Why you are paid to not to work, to not to leave your house, and that prompt you to stay in your house forever without working. You are not worried about COVID now. You prefer it as a blessing, moral hazard. Okay. Moral hazard refers to the phenomenon of a person's behavior being affected by his or her insurance coverage. Moral hazard is known to exist in all types of insurance markets. People may be more careless with property that is insured. Now, I told you the example with this finance company's bank robbery. They put firearmed security guards to protect it, but soon removed that. Why? We are protected by the insurance company. No, that should not be the case. You have to protect your property as if you are not covered by any insurance company. The main way that moral hazard comes into play in the health insurance market is through an increased demand for healthcare services utilized. We have seen this again and again. Okay. Many very young people do a lot of unnecessary X-ray tests because that is covered by their insurance policy. My annual insurance policy expires on this day. Before that, I'll admit to a hospital and get everything tested. You really need them. Okay. Right. Now, by now you have an understanding of what is moral hazard. Means what? People started to behave recklessly the moment you have insurance policy. Now that's a problem for the insurance company. Okay. How do you sort this out? Tell me some ways that you can sort out this. How do you handle moral hazard of insurance? Yeah, no claim bonuses is one mechanism. You don't make any claims during the period. If so, next period you will be given a deduction from your dues. No claim bonuses, NCBs. Okay. Right. So that's one way of ensuring that you look after your property. Moral hazard arises when someone who is protected from loss fails to take measures to avoid excessive risk. The term originated in the insurance business where people who are insured against loss fail to take measures to minimize risk. For example, people who have flood insurance may build in areas that are known to be at risk of flooding. Okay, so I'm covered by a risk policy. Therefore, I'm not worried about risk. Okay. Okay. Now you can remember a very powerful politician in Libya, Gaddafi. He had a son. Okay, he had many sons. He had one son who went to Switzerland and drove in opposite direction in a one-way lane for 32 kilometers. Okay. He was captured by the police of that country. But it is said, father, the leader Gaddafi, said to this government, I'll remove all my money in your country unless you apologize. And it happened. Okay. You have seen somewhat similar behavior by sons of politicians here as well. Okay. The moment you are protected, you behave recklessly. Okay. There was a very infamous politician from Catalonia. He had a very infamous son. He's no more behaving in that manner now. Okay. When the protection shield is removed from you, you know how to behave even in a nightclub. But when you are covered by that protection, moral hazard. Okay. Lot of rich business people find that their children cannot manage their businesses after their death because they were always protected by the shield of the father or mother, moral hazard. In insurance, the same. The moment you have an insurance policy, you believe I'm covered. And I don't want to take care of myself. Someone will look after my well-being. Whatever bad things I do, I am protected. So that will create a problem. Insurance companies are very much worried about that. After Katrina cyclone, the insurance companies said they are not going to pay any insurance claim for cyclones in that area. In Sri Lanka, there are a lot of areas where red mark for earth slips, people still construct houses in that area. The insurance companies do not undertake risk. Okay. Insurance is not undertaking definite risk. Insurance is accidental risks, not the definite risk. So with these kind of things, insurance companies are trying to mitigate moral hazard. SLDIC, Sri Lanka Deposit Insurance Scheme. Right. Now that's another area. What is deposit insurance? You go and deposit in a bank or the finance company. If that bank collapses, still you will be paid your deposited amount. My question is it a good practice? Okay, to some extent. What are the other answers? If you go and deposit your money in a bank, if that bank collapses, still your money will be paid back. That is known as deposit insurance. Is it good? It's very good. Yes. Okay. Right. Good. Right. So the common understanding is it's good. And why we do it is because we have to protect the financial system stability. That means if bank collapse, if one bank collapse, we believe the general public will not trust the banking system. Therefore, we don't want to see any bank collapse. We want to ensure financial system stability. Therefore, deposit insurance is there. Even if they collapse, still you are safe. Okay. Now think from the moral hazard angle. What's wrong with this? You said it's good. Okay, fine. What's wrong with what you say is good? What kind of banks or finance companies collapse? What kind of banks or finance companies collapse? Well managed or ill managed? Well managed or ill managed? ILL. Ill managed collapse. Ill managed collapse. Okay. Okay. Right. A depositor will see the signs of ill management. Okay. A depositor will see the signs of ill management. What are they? When they offer the higher interest rate itself, that shows they are ill managed. When you look at the ratings, S&P or Fitch ratings, when they are downgraded, you know that is ill managed. Still people go and deposit money. Whose fault is that? Okay, suppose Sakwiti Ranasinghe is offering 24% for the deposit, where NSB is offering only 6%. Okay, Sakwiti Ranasinghe is offering an individual offering 24% for the deposit. Highly rated state-owned bank is offering at 6%. The choice is yours, 6% or 24%. Suppose you selected 24% and that institute collapse, should you be bailed out? Tell me yes or no. You have deposited your money in with Sakwiti, while you have option of depositing the same in a well-managed company. You deposited in ill-managed company, and you know the symptoms. The interest rate offered itself shows the symbols. Is it good to give away your lost money? Give me answer. No, no, no. Okay, okay. No. Right. Right. Now you can see deposit insurance is not a good thing. It creates moral hazard. What is the moral hazard? The more we protect ill-managed companies, the more and more people will go and deposit their money in ill-managed companies. Okay. Why? If they don't fall, I'll get 24%. If they fall, I get my capital. I am not at a risk at all. Hannibal Gaddafi, the son of Muhammad Gaddafi, knowingly breached the rules of a European country. Why? He's young, he wants to show off, and he knows one thing: nothing will happen to me. Okay. Such sons definitely created the destruction of his father, a well-respected gentleman of Libya. You have seen how he was killed. Okay. Means what? Moral hazard. When you believe you are so protected, you yourself create the damage within you. Okay. Now the problem is, even in Sri Lanka, we have SLDIC, Sri Lanka Deposit Insurance Scheme. Deposit insurance is a measure implemented by many countries to protect bank depositors. Okay, so that is SLDIS. Okay, sorry for this mistake. It is known as Sri Lanka Deposit Insurance Scheme. S. Here it is mentioned as C. That's wrong. That must be C. SLDI. S, not C. Sri Lanka Deposit Insurance Scheme. Okay, so deposit insurance is a measure implemented in many countries to protect bank depositors. Now I said it's bad, and I say That's there even in Sri Lanka. That's there even in US. Deposit Insurance Scheme, DIS, Deposit Insurance Scheme. Why? Now you all agree it's bad, but you do it. Why? You know it's bad, but you do it. Why? Okay, year 2008, okay, mainly to ensure the financial system stability. Yes, that is the answer. Right. In year 2008, many banks and finance companies in US and some of the European countries started to collapse. Bear Stearns, Freddie Mac, one by one, these institutions were collapsing. 200 years old banks were collapsing. In France, a bank was collapsing. Okay. And next will be AIA, America Insurance Company. And next will be Morgan Bank. These kind of announcements were taking place on Friday. Saturday, the Treasury Secretary and the Chairman of Federal Reserve, Ben Bernanke, all got together. They had a very lengthy discussions in the weekend, and following Monday, $700 billion bailout package was announced, and the American insurance company as well as the rest of banks were given bailout packages, so they did not collapse. Ben Bernanke, the chairman of Federal Reserves. In US, they don't call it central bank. Their regulator is known as Federal Reserves. And here we call governor, they call it chairman. The chairman of Federal Reserves, then Ben Bernanke, was asked why he bailed out these banks. That's again moral hazard. He came up with a very good answer. He said, if you are living, okay, if someone is living in a house, a wooden house, and he has a practice of smoking, a chain smoker, in addition to that, he goes to sleep while having a lit, burning cigarette in his hands, and he sleeps on a rubber mattress. You advise him many times, do not smoke, at least do not smoke when you go to sleep. But he never listened to you. But one day, when you wake up at night and find his room is full of fire, means what? A cigarette must have fallen to the rubber mattress and it has caught fire, and his room is on fire. What can you do? Will you save this man or not? Tell me your answer. Will you save this man or not? No. Okay, two arguments. Good. One say no. Why? You have enough reasons. We have advised him many times, and he has acted against our advices. Why should we bail him out? There is a finance company. Okay, right. Okay. There's a finance company, and the rating companies have downgraded them. That means if you deposit, you are undertaking a very high risk. Amidst of that warnings, you go and deposit in that institute. That institute collapsed. Why should I bail out you? That is the question. Okay. Tell me a reason why should we bail out. So Ben Bernanke says, okay, if that person lives in a wooden house, and if the entire city is made out of wooden houses, then we have to protect. Not to protect that person, but to protect the city. The same applies to banks and finance. If one finance company collapses because they are ill-managed, that's their problem. Why do we want to save out, bail out the depositors? The reason is the town is made out of wooden houses. If one catch fire, that will spread to the entire neighborhood. Entire town will collapse. Entire banking and the finance system will collapse. That's why we want to protect, not to protect that guy, but to protect the system. The same applies for SLDIC. The Gazette, okay, right, in January, okay, 2018. The amount of compensation payable to a depositor shall be limited to the total insured deposit computed as above, subject to a maximum of rupees 600,000 or its equivalent in the case of foreign currency deposits if such amount exceeds 600,000. Okay. Now this is DIC, a deposit insurance scheme. In Sri Lanka, if a depositor find the institute that he deposited money collapse, still he will be repaid up to rupees 600,000. Okay, right. Let's say CIFL collapsed, ETI collapsed, and you have deposited 50,000 rupees in ETI. How much will you get? You have deposited 50,000. How much will you get back? Quickly, tell me the answer. 50,000. You will get 50. Yeah. You have deposited 550,000. 550,000. How much will you get? Yeah. You have deposited 700,000. How much will you get? Yeah. That is the ceiling. Very good. Now, another thing. I have deposited in this institute 3 million, right? But on different occasions, each FD certificate is 500,000. I have 6 such certificates. How much will I be paid back? How much will I be paid back? Correct. Only 600,000. That is the maximum ceiling. In real, I have 6 FD certificates, each 500,000, but my entire amount is 3 million. So I'm subject to ceiling. That is 600,000. So that's what I will be paid back. CBSL, Central Bank of Sri Lanka, implemented a mandatory deposit insurance scheme under the provisions of Monetary Law Act with effect from 1st of October 2010. In 2008, we saw a financial system issue in US, and it spread to many European countries. And after 2009 recovery, throughout the world, the regulators look at this issue, deposit insurance. So in Sri Lanka, with effect from 1st of October 2010, SLDIS came to power. All commercial banks and finance companies are members. Now you can remember, all commercial banks and finance companies are members. Therefore, deposits on such will be bailed out with the maximum ceiling of 600,000. All deposits except the following are eligible for the scheme. Now, all deposits, but not these. Now you have to remember what not these for your exam purpose. Deposited excluded from SLDIS, Government of Sri Lanka. Okay, so if the government has deposited money, they will not be given that 600,000. Shareholders, let's talk about that. Shareholders of a company. shareholders of a bank have deposited in fixed deposit in the same bank where they have this shareholdership, should they be given this 600,000? So you know that they are excluded. Okay, I'm asking, should they be given? And you say no. Why? Why shouldn't they be given? Why shouldn't they be given? They are the owners of this financial intermediary, correct? They are the owners. So owners are liable. Okay. So in real, what happened is management is managing the company. Shareholders read the annual reports, and at the AGM they have the power to raise their voice. So if that has not happened, that's their problem. Okay. So shareholders are not paid back during a deposit insurance. Directors, should they be paid back? Directors, they have deposited. Okay. Right. Who are directors? Those who have very close look at the management of the institute. If they have deposited money, they should not be paid back. So SLDIC has excluded the directors. Key management personnel, obvious. They are the people who are managing this institute, and if the institute has collapsed, they are responsible. Other related parties. Okay. For the institute, you have related parties. Who are the related parties? Maybe a mother company, maybe a subsidiary, okay, or maybe related parties of key management personnel and directors. So these related parties, if they have deposited, they will not be paid back. Deposits falling within the meaning of abundant property. So what is abundant properties? The Banking Act number 30 of 1988 deals with abundant property of customers in banks. Under those provisions, details of all such money and property in the name of owner, etc., which have not been operated for 10 years must be notified. So non-operational for 10 years means abundant properties. Right. Okay, so you can read this carefully. This describes about abundant properties. Okay. Now that's on SLDIC, Sri Lanka Deposit Insurance Scheme. Right. So we talked about insurance. Insurance is the first financial product that we come across. Okay. By now, you must be able to answer these things. Okay. Send me the answers very quickly. What are the two types of insurance products? What are the two types of insurance products? Good. Very good. What is the category of health and surgical insurance? Yeah, it's general, nothing to do with life, just general, non-life for general. Okay, good. Then benefits of Sri Lanka Deposit Insurance Scheme. Now, why do we want this SLDIC, Sri Lanka Deposit Insurance Scheme? Enhance public confidence in financial sector. Safeguard interest of small depositors with low financial literacy. Okay. Financial literacy. Right. So financial literacy means your ability to select the right financial product that matches you. Okay. Remember, financial products are like vehicles. We have a lot of vehicles. Remember, even a wheelbarrow is a vehicle. What you do with a wheelbarrow cannot be done with the Montero. Got it? Means what? You have different type of vehicles for different usages. You have credit cards, you have housing loans, two different products. Okay? If you try to build a house utilizing 20 credit cards offered by 20 banks, you can do it, no problem. But the problem will be paying back and in the interest rate and the conditions. Okay. So for housing loan, you must go for the housing loan. For consumption loans, you must go for the credit card. You should know the right selection. If not, you are in danger. Okay. Right. So that is financial literacy. Warren Buffett used to say, if you have a credit card and if you want to be rich, the first step is take a scissor, cut your credit card into 2 pieces, put it into a dustbin. Okay, so that's what Warren Buffett said. Later on, Robert Kiyosaki wrote a book. If you want to be rich but still have a credit card, how you do it? Yeah, you can do that. Okay. So these are different financial instruments, and you should know when to apply. Okay. So that is known as financial literacy, right? But unfortunately, a greater number of people lack financial literacy. I have met many people who have lost millions in stock market, and some of them are good qualified accountants. They know how to read the financial report, but what they lack is maybe emotional intelligence. But anyway, if you have failed, that means you lack financial literacy. Okay. I have met many people who show off and finally end up in trouble. Initially, they become the brilliant, but soon they are like the most illiterate in finance. Okay, so financial literacy is something you must acquire. But there are a lot of small depositors with low financial literacy. They only look at the interest. They do not know what is even meant by ratings by these credit rating companies like Fitch. Okay. There was a singular website, randora.lk. Now I don't see it in active mode. Anyway, those days they had some nice articles. One such article showed if cricketers happen to appear, okay, I can't say that applies to each and everyone, but they wrote it very nicely with some nice advertisements. And they say, if cricketers appear for a bank advertisement, or the finance company's advertisements, beware, something like that they wrote. And what they really said is, people don't even look at the Fitch ratings, the credit ratings. They only look at the celebrity. When Airangani Sevasinghe says something, you believe that, instead of reading credit ratings. Okay. When Sangakkara, Sanatho, Mahela says something that, you believe it, instead of looking at financial statements and ratings, capital adequacy. You don't understand that. You don't understand that. What you understand is the reliability of these nice celebrities. Such people lack financial literacy. So you want to protect such people. Encourage savings among small-scale depositors. Discourage unauthorized deposit taking. Now that's there. SLDIC is not covering Sakviti Ranasinghe. SLDIC, Sri Lanka Deposit Insurance Scheme, covers only licensed finance companies, licensed banks, commercial banks. That's all. If so, the general public will understand they should not deposit in unauthorized deposit-taking institutions. Reduce the burden on government when mismanaged firms fail. Yeah, that is an issue. If a mismanaged company fail, that's not the government's problem. We have a nice attitude. We think government is our parent. They should look after all our personal matters. No. We have to look after our personal matters, not the government. Okay? Government is not our parent. But a lot of people believe the moment, okay, golden key collapsed, government must bail out my money. They must pay my money back. So that thinking attitude should be removed. Reduce the burden on government for these ill-managed institutions. Okay. In US, 2008, these institutions became known as too big to fail. Okay. If they fail, that will have a huge hit on the US economy. Okay. So I get this quoted from somewhere, too big to fail and they should be protected, including Morgan Bank. So taxpayers are like the safety net. Okay. Now, if you don't have this deposit insurance scheme, okay, if you don't have this deposit insurance scheme, that will be the burden on the government. Remember, government means finally the taxpayers. The taxpayers, they get the burden of government bailout packages. Okay. Now, these are the banks that collapsed during 2008 in US. Bear Stearns, Freddie Mac, Fannie Mae, okay, and they fell upon the general public. They were ill-managed, and the safety net was created by taxpayers' money. That should be avoided. That burden should be avoided. Reduce the burden on government. Okay. So they were nice cartoons. Too big to jail. In real, if you are ill-managed, public money, you should be jailed. But you are too big. Therefore, government has to come and bail out you. Now, that's the book which I mentioned. Ben Bernanke was the chairman of Federal Reserves, and he wrote a very nice book that's available in our IBSL library here. Right. So when I was conducting physical classes, I used to ask students to read this book very simply, very simple language, but describes very nicely. Okay, so we are once again looking at insurance. What is insurance? Insurance is the equitable transfer of the risk of a loss from one entity to another in exchange of payment. That's a very nice answer. So you can remember this and write something for your exam. It is a form of risk management primarily used to hedge against the risk of contingent uncertain loss. If the loss is certain, no one wants to bear it. When the loss is uncertain, then only I want to bear it. When the loss is uncertain, I know the chances of that loss is very less. If so, if the loss never takes place, it's profitable to me. That's why I insure. Right? But if the loss is very certain, then I'm not coming to insure that risk. An insurer or insurance carrier is a company selling the insurance. The insured or the policyholder is the person or the entity buying the insurance policy. So you have insurer and the insuree. The amount of money to be charged for a certain amount of insurance is called a premium. So when you take a life insurance policy, you pay monthly premiums. Risk management, the practice of appraising and controlling risk, has evolved as a discrete field of study and practice. Yes, risk management has become a different subject. Even in this course, you will have that as a subject. The transaction involves the insured assuming a guaranteed and non-relatively small loss on the form of payment to the insurer in exchange of the insurer's promise to compensate. That is known as indemnify, compensate. Okay, if something happens, initially pay me small amounts, And if something happens very bad, I'll meet the entire claim. The insured, in the case of a financial or personal loss, the insured receives a contract called the insurance policy, which details the conditions and circumstances under which the insured will be financially compensated. Okay. So you are given a nice contract, a set of pages, go through that. That is called insurance policy. That shows how you are covered. An insurer or insurance carrier is a company selling, okay, that I said. Now, legal principles of indemnity, principles of insurance. Right. So remember these nice terms. Indemnity. The insurance company indemnifies or compensates the insured in case of certain losses only up to the insured interest. Okay. Only up to a interest, not to the entire amount. And I can insure only something that belongs to me. If someone else's interest, I cannot go and take a part of it. Okay. The insured typically must directly suffer from the loss. I own it. If I lose it, I suffer. I am not suffering from someone else's ownership. So there must be ownership for me to insure something. I can insure my life, but not someone else's life. Okay. So it is not gambling. Utmost good faith. Uprema fide. I am providing you real information, honest information. If I hide something, then the insurance company need not to pay me. Material facts must be disclosed. Then only they can really calculate my premium. I am a chain smoker, but I say I don't smoke. And the insurance company set my monthly premium on the belief that I don't smoke. But I'm a chain smoker and I dies out of lung cancer. The insurance company will not honor my claim. I have breached trust. I have provided them false information. Causa proxima, or proximate case. The cause of loss must be covered under the insurance agreement. Okay. Until tsunami hit Sri Lanka, we never knew what tsunami is. Okay. So naturally, none of our vehicle insurance policies covered tsunami. Okay. Those days, in year 2004, our president was Madam Chandrika. She was known as, Her Excellency was known as always late. She never appeared to any event on time, always late. And it is said that it's just a story, not a real one, no? Just a joke. Right? It is said that the Pacific Warning Center sent messages to President's house and say, tsunami will arrive in Sri Lanka by 10 a.m. When Madam came to know that, she has said, ask tsunami to wait. I'll be late by 30 minutes. Okay. So it is said, even Madam believed tsunami as a Japanese person, not as a natural disaster. Anyway, what I want to say is, no one knew tsunami until it hit us. Okay. So most of our vehicle insurance policies, almost all, have neglected tsunami cover. If so, the insurance company need not to honor the claim legally. Mitigation. In case of any loss or casualty, the asset owner must attempt to keep loss at a minimum, as if the asset was not insured. Why did you remove firearmed insurance guards? You try to behave that. Whatever happens, insurance company will pay me. Excuse. Good morning. Good morning, Ken. Okay. Okay, sorry. Right. Mitigation. You must ensure that you try to protect the assets as if they are not mitigated. Otherwise, we are ending up in what? Moral hazard. Then the concept. So this is not a principle that is important for insurance, just a concept. Ex gratia payment. The sum of money paid when there is no obligation or liability to pay it. Right. Now, I told you, 2004, when tsunami hit Sri Lanka, none of the vehicles were covered by tsunami. If so, no need to pay insurance cover for vehicles. But there were a lot of nice arguments going on. Okay, one individual said his vehicle was parked on a river bank. Okay, and when the sea water came back to the river water level went up and it covered my vehicle. Therefore, I am covered by flood cover, pay my insurance claim. Then the insurance company argued, flood does not mean water going up, but water falling down, the rainwater and the river level going up, not sea water attaching to the river water. And salt water was noticed in your vehicle. So a lot of nice arguments are going on. But with this ex gratia, one insurance company said, anyone who is having flood insurance, we will pay your tsunami cover. Legally, you need not to do that. The recent cost is not covered, but out of your generosity, you paid it. Not legally bound. Okay. When something has to be done ex gratia, it has done by voluntary, out of kindness, your graceness, but no legal requirement to pay. So in insurance, they have this ex gratia payment ability. Those written premium. So in many companies, the top line is known as revenue, but here in insurance company, the top line is known as GWP. Gross written premiums are total revenue from a contract. So in any other company, when you look at financial statements, the top line is revenue, income. So you call it income statement. But when you look at insurance companies, the same term is covered by another name, GWP. Okay, so remember this. Surplus gains enable the company to increase gross written premiums and reduce amounts ceded to reinsurance. Right. Then the regulator of insurance industry. IBSL is the regulator of insurance industry, and that is number 43 of 2000. It's coming under the purview of Ministry of Finance. IBSL, Insurance Board of Sri Lanka. The objective and responsibility of the IBSL is to ensure that the insurance business in Sri Lanka is carried out with integrity and in a professional and prudent manner, with the view of safeguarding the interest of policyholders and potential policyholders. Hence, the IBSL supervises the financial performance, financial strength, and solvency of the insurance companies with a view of protecting the public interest and safeguarding the industry as a whole. At the very first day, you said you trust the institutions, you trust the financial intermediaries. So there are institutions, and the first one under NBFI, non-banking financials, we talked about insurance. You trust insurance for one thing, because that is highly regulated by IBSL, Insurance Board of Sri Lanka. Then you should know their objectives and responsibilities. If you are a tiger, you must have teeth. If you are a tiger, you must have teeth. If you are the regulator, you must have powers. Okay. The first power you get is license a person. Right. Then advise government, implement the policies. Okay. So these are the areas coming under the purview of IBSL. Okay. Now we are coming to the ending of this session. Okay. So last week we started the session, we talked about NBFIs, we talked about shadow banking, then we looked at credit evaluation. Right? Credit evaluation, I did it just to introduce the subject, something very important. But for exam purpose, credit evaluation is not questioned here. Okay? Other areas can be questioned, like the shadow banks, so risk transformation, maturity transformation. Then we talked about today insurance. All what we said, discussed can be tested. Okay, what is meant by reinsurance? What is meant by bank assurance? Okay, GWP. Then we talked about general insurance products, life insurance. Okay, then we talked about these concepts, causa proxima, uprema fide. Okay, that areas can be tested. So you should go through these slides very carefully, okay? And that will be available for you. At the same time, you must take your time and look into some areas like you can log on to csc.lk. That's Colombo Stock Exchange website. When you log into csc.lk, you can go into annual reports of listed insurance companies. Okay, let's say HASU. There's a code. If you want to search, you can use this code at HNB Assurance, HASU.n. So .n 0000. When you put that in the search, you get HNB Assurance. Then you can look into the annual report. You can look at the income statements. What are the areas they discuss? That's how you must cover your background. You must start to learn with an interest. And I showed your book, Courage to Act. I don't know whether that's available in your bookshops, but physically, when the classes start, you can get it from this library. Read such nice articles. Then on Daily Mirror and Daily FT, you will have certain columns on different information. Okay, or even you can log on to your maybe LBO, Lanka Business Online, and get updated on current issues. Okay. Right. Then, for exam purpose, you must look at past papers. Later on, we may look into how insurance area is covered in past papers. Basically, all what we discussed today are very important for your exam. Right? Then look at the past paper questions and look at the answers. Go through this csc.lk website, get down quarter reports. We talked about deposit insurance scheme. Under deposit insurance, we believe the general public will discipline the market. That means when they read annual reports, quarter reports, they will know how the company is managed or ill-managed. Based on that, they will sell the shares. If a bank or the insurance company is not well managed, they will sell the shares and the share price comes down. That gives the signal to the management. That is a way of controlling. Instead of government coming and like a parent protecting the depositors, the shareholders has a role. Okay, so you need not to buy shares, but at least go to csc.lk website and at least start looking at, not to read the entire thing, at least income statements, balance sheet, and comparing one insurance company against another. What are the areas they are specializing? Right. So we have come to the end of this session. With that, I'll end today's session. Thank you.